Hello, everyone, and welcome to our webinar. Thank you very much for joining us today for our current webinar, Latin American Investment Outlook 2026. Navigating a shifting geopolitical war, we truly appreciate you taking the time to participate in this event. For some of you that may know they haven't met with me before, my name is Alessio Mazzanti. I am a managing director at Latam Investment Banking. I will be moderating today's session. Unfortunately, my business partner, Roberto Sanchez, will not be able to join us. He's still recovering from a medical procedure. Hopefully, he will be coming back to business soon. For some of you that have not met us in the past, Latam Investment Banking is an investment banking boutique. We advise business owners, family-owned companies, and investors across the region in the Americas on their strategic processes, which include merger and acquisition, either buy or sell side mandate, or capital raising, debt or equity. For today's conversation, we think it's especially relevant. We have the event in Venezuela at the beginning of 2016, at the beginning of this year. And I think it's a significant, there will be a year with significant global and geopolitical changes. We think these shifts are already influencing the capital flow, the investment decision, and strategic priorities across the region, not just Venezuela. Today, we hope that John will provide a perspective and context to better support some corporate and investment decision in the region. So, John, thank you very much. Welcome back. John Price is a founder of American Market Intelligence. I consider John one of the most knowledgeable and well-known analysts for economic and political context in the region and as well globally. He has deep experience advising multinational companies and investors on international strategy, geopolitical risk, and cross-border decision-making. I hope his insight will help us to step back a little bit from the short-term situation and then focus on more structural forces shaping the market and investment behavior in the region for this year. So, John, thank you very much. Happy to have you back. I appreciate you can please introduce yourself. You have extensive experience, and also talk briefly about America's market intelligence and the services. So thank you again. I'm happy to have you back.
Well, thank you, Alessio, and thanks to you and Roberto for the invitation. I think this is the third year running we've had this webinar, and it's been an absolute pleasure to collaborate with you and your team and your excellent support team as well. Yes, we very pleased to be here. Our company, America's Market Intelligence, has been operating in Latin America now under different names as we evolved over the years for over 30 years. And our mission is to help our clients who are traditionally strategic investors in the region, who buy and sell products and build products in the region and export those, et cetera, to help them grow, measure, and protect their business interests in Latin America. So whether they're looking to grow their enterprise through investment, through exports, by opening new markets, we certainly help them study that. We also help them in times of strife, in times of competitive pressure, in times of disruptive pressure, in times of geopolitical pressure, to help them understand what's going on so they can protect their business, they can protect their market share, protect their revenue. And then, of course, companies always need to measure how they're doing. They need to take the pulse of their business, how they're doing vis-a-vis the competition, how they're doing in the face of their clients. And so we have a series of solutions around that as well. So pleased to be here and looking forward to this discussion.
Thank you very much again. Before we start with our particular question, for the audience, we will be recording this webinar and it will be sent via email for those of you that register. And we will try to answer your question in the chat at the end of the presentation to try to get John's perspective before we try to answer those questions. So I guess everyone may be eager to hear you. So let's jump straight to the first question. And as I mentioned to you when I saw you on Friday, I think the easiest part will be for me to answer this question. I think to ask this question, the answer I think are going to be very complex. We will try to stay with a schedule which is half an hour, but if people is willing to extend, I think we will have more time to get your views and as well to answer some more questions. So the first one, John, is how are current geopolitical shifts changing the way global investors view Latin America in 2026? And of course, I think you may wanted to mention something about what happened in Venezuela at the beginning of the year that has been a significant impact in the region.
Sure. Well, most people, I think, understand geopolitical to mean things going on or originating externally from Latin America that are impacting Latin America. But I think it's important for you to understand how, say, the policy making or the preferences that are being communicated out of Washington, or for that matter, the policies coming out of Beijing that impact the region, you have to understand what's going on in the region, because it is pretty noticeable. People will say that the region is shifting to the right, and some people might correlate that with a more aggressive, more embracive approach by Washington to Latin America. But in fact, politics in every country in the world is always local. Chileans don't base their vote on what's happening in Argentina. Mexicans don't base their vote on what's happening in Colombia. Politics is always local. But every once in a while, an exogenous or external event impacts the region very similarly across all these markets. And the most recent one was COVID. Latin America was very ill prepared for COVID. It had a highly densely populated cities, often with 3 generations living under one roof, with a very poor infrastructure in intensive care units, in hospitals. And most importantly, 60% of Latin Americans work informally in a cash environment or an environment, a gig economy environment, which requires them to be out on the street, face to face with people. When Latin American policymakers, most of whom were sort of center-right technocrat governments, implemented their policies, they were incredibly restrictive. They put out of work essentially the bottom 60% of the population for upwards of several months, destroyed what had been a slow-moving but positive improvement in distribution of wealth in Latin America, which got 15 years of that progress got wiped out in 8 months of quarantines. And so voters were rightfully upset, voted out those technocrats, voted in populists. And by 2023, we had 7 left-wing populists leading the 7 largest economies in Latin America. Now, despite some of the proclamations of some of these leaders to radically overhaul their economies, their radical agendas were very much hemmed in by good institutional counterweights like central bank authorities, like plurality in Congress, the courts, etc. But it meant that over the last 2 to 3 years, most of these populist governments, whether it's Colombia, Boric in Chile, the different presidents in Peru, the Peronists in Argentina, they made very little progress economically. And so as these countries sort of came out of a health crisis and into an economic crisis, the blame politically shifted from the previous governments to the acting populist governments. And now we're seeing a widespread rejection of those leftist governments and an embrace on the right, aided in big part by a across the board, across the region, worsening security situation, where what I call retail extortion is going on in most major cities, and crime is getting closer and closer to the voter themselves. So that's the context in which this sort of global battle for resources and things like that between the Chinese and the Americans impacts the region. So great example would be Mexico puts big tariffs on Chinese imports. Most people think that's to placate Washington. It's not really. It has to do with the fact that Chinese imports into Mexico have been growing at a strong pace for over 10 years. And the trade deficit now keeps getting worse and worse with China. But the real tipping point was when Chinese products were essentially blocked out of US markets by the tariffs that were put in place in Trump 1, kept in place by Biden, and further grown under Trump 2. Those products were not entering the US market. And so they were being dumped in middle income markets, starting with Latin America. So Chinese products, as much as they have been growing in demand in Latin America, were literally dumped on these markets over the last 6 to 8 months. And so that's an example of how it was really Mexican manufacturers calling out to their president to say, hey, you need to protect us. So you really have to dissect what are the pressures coming externally versus the ones that are coming internally to understand that. But there's no question that the headlines made by threats to, at the beginning of the Trump to Panama, threats made to Colombia, the extraction of Maduro in Venezuela, have all created for most countries in Latin America, a sense of fear and concern that they really need to do all they can to keep Washington calm, to stay out of the storm of their anger, and to make changes, particularly in how they do business with China, that will satisfy the Americans. There are a few countries that are far less dependent upon the United States and who have stronger engagement with the Chinese and have found the Chinese to be a more reliable business partner, that are not necessarily cowering to American pressure. I speak of Brazil, I speak of Chile, I speak of Argentina, and even to some degree Peru. So it is a very different story when you're talking about Central American markets, when you're talking about Mexico, where there is a heightened dependence on the US, where the US has strong economic levers, and to the degree they want to fulfill their goal of lowering the influence of Chinese companies in their economies, where it is to ensure that a pro-business, pro-American government is in power, whether it is strong oversight of the election process in Honduras or the extraction in Venezuela, or whether their mission, which is definitely driven by Marco Rubio, is to affect regime change in Cuba and therefore minimize any economic support that goes to Cuba out of places like Venezuela and Mexico. Those countries' ability to stand up to or deflect that pressure is far less than South American markets. And so it's an unequal story, and the impact is different, all layered on top of this underlying story that is possibly more important.
Great, thank you very much. I think, the Financial Times recently in a report, they mentioned also the idea of the blue wave, where voters are swinging to the right. And as you said, it's still consequences of the pandemic, but also the security issue, the idea of having a more secure countries and cities. You already touched a little bit, make some comments about countries. I think we have audience for all over Latin America, and I think they may be interested in listen a little bit about some views of some of the main countries. Of course, Mexico and Brazil are always relevant in the region. How are they positioned to capture part of the investment opportunities under the current global geopolitical dynamics? Venezuela, even if it's still a question mark, I think we can maybe touch a little bit about Venezuela, John, and some other countries that you see like well positioned again to capture part of these opportunities that Latin America is in the middle of this geopolitical issue, and they have plenty of natural resources, which the war is demanding. So could you please let us know your views on some of the key countries in the region?
Sure, absolutely. Let's start with Mexico. Mexico, in many ways, is even better positioned now to capture nearshoring flows than it was before Trump came to power. Why? Because the economic imperative of moving your factory out of China and putting it in Mexico is even greater today in light of the higher tariffs facing Chinese exports into the U.S. market than was the case a year ago. However, the Mexican nearshoring investment flows have slowed since last year, and even more so since 2023. Last year, 2025, nearshoring investment in Mexico was about half of what it was in 23 and about 3/4 of what it was in 24. And that's, of course, around the uncertainty. But and it's been led mostly by American companies who feel confident that their movement of their operations from China to Mexico remain protected under the USMCA. European companies, particularly the automotive sector, have been less reticent, and as well as other Asian investors, particularly the Chinese, have been very concerned about how their investments might be treated in Mexico by American policymakers. And so they've been the most reticent to continue nearshoring. What Mexico needs for nearshoring to continue is clarity around the longevity of USMCA. Will it be renewed? Will it be renewed with some changes? Will it essentially be repackaged enough that it requires a new set of approvals through the three different governments? Or is it just sort of skipped over, nothing is agreed upon, in which case it enters a phase for the next, I believe, 8 or 10 years, whereby it is still kept in place, but it has to be renewed each year, which would be devastating for Mexico, because certainly anybody who builds a sizable factory has a longer time horizon than 1 year, right?
Yeah, it's scheduled to renew at mid this year. Is that correct?
Correct. Middle of this year in July. Mexico is going to get a little crazier before it gets calmer. There is already reports of U.S. military incursions inside Mexico, sanctioned by the Mexican government, in other words, approved by the Mexican government, to target cartel assets, whether it's caches of arms or caches of drugs. That military incursion is going to expand. It's going to expand because it is being part of the U.S. Desire to weaken organized crime. It's also a desire of the Mexican government to weaken organized crime. However, in Mexico, this is complicated. The Morena party was built in 6 years, and it was built without the typical corporate patronage that established parties in Mexico were built with. Funding that went into the PRI, funding that went into the PAN. Mexico's Morena party was financed first and foremost by the Fondo Minero, which the AMLO administration took over upon entering office, and used those funds to finance most of its candidates in northern Mexico, where the party was weakest in the midterms, and thus created a national party. But there is speculation also that part of that campaign expansion involved a degree of cooperation with organized crime. I say speculated because some will tell you it definitely happened, others would tell you it's still unproven. So I'm not here to judge either way. But that suspicion, if it holds true, means that the party itself is divided. You have a modernist like Scheinbaum who would like to move forward and cleanse Mexico of organized crime. But you may have legislators who are nonetheless tied to these groups and therefore become an obstacle to such a process. So Mexico is in the party itself is split around these lines. And, you know, there's a traditional political thinking in Mexico that you don't want any US intervention. And then there's more modern thinking in political that says, no, we need American help to deal with this issue, so the security issue. So there's a lot going on there and a lot of uncertainty as a result. But Mexico remains economically a place that continues to capture that kind of investment. Brazil, you know, not only is it a market that almost any consumer product can scale up to and therefore attracts investment, but it also is home to the fastest growing lithium mining in Latin America. So its deposits are not as big as Bolivia's or Argentina's or Chile's, but they've pushed very aggressively to up their lithium output. And Brazil, in contrast to most of Latin America, not only has the traditional metals like copper and iron and other industrial metals, as well as precious metals, but it has rare earths. These are exotic minerals that particularly military production needs, as well as high-tech production needs. And the US, after some ideological skirmish with Lula back 6 months ago, is now very much aligned with Brazil and has a agreement, still a loose agreement in place to help develop Brazil's rare earths industry with American capital, American mining companies, and American processors. And that gives Brazil a degree of geopolitical shield against negative policymaking coming out of Washington.
We have election coming in Brazil this year, so that's something that will be quite relevant for the future of Brazil and relation with the U.S.
Yes, and at this point, even though Lula remains not terribly popular amongst at least half the population, the alternative on the right is still kind of in disarray. The Bolsonaro family still controls the evangelical vote and a lot of other loyal voters on the right. Jair is in jail. His sons are not seen as the same level of competence, but the Bolsonaro family is still kind of the kingmaker on the right. There are very good candidates on the right, but it's uncertain that the Bolsonaro family will not resist the temptation to put one of their sons on the ticket and thus split the vote on the right and provide Lula with the opportunity to be reelected. So, but at the end of the day, a Lula presidency with a Congress that is center-right will limit any sort of populist policy within the Brazilian economy, even if he wins again, because his party's not strong. Another country very much looking in good position is Chile. Chile, which under Boric and just the sensitivities of the investment class in Chile drove a lot of their capital abroad. Under Kast, they feel much more comfortable with him ideologically and the people around him and the sort of pro-business policies that most anticipate there. So we're going to see a lot of repatriation of capital. Chile's also in a very advantageous position as copper and lithium are seen as, you know, the metals of the future. And but Chile has some work to simplify its investment laws around the extractive sector, which have grown very complicated over the last 10 years as layer after layer of bureaucracy was built. Another interesting country is Costa Rica. Costa Rica is really the sort of mid to high level talent outsource champion of Latin America, whether it's medical equipment assembly or software workers. And their business model, their export model, which is a combination of services and high tech, bodes well in terms of currying favor in Washington, because those are assembly operations that often they compete with China on. Another country to look out for positively is Peru. Despite the political and there's another scandal on the horizon, as President Jerry seems to have been in discussions with the Chinese in a way that is considered unscrupulous. There's a very interesting dynamic in Peru that explains all of this, constant vetting of presidents and rejection of presidents. If you go back to the days of Fujimori, when Vladimir Montesinos was the Minister of the Interior, he trained in the war against in the civil war against leftist guerrillas. There was hundreds of technicians trained on the most advanced surveillance methods and technologies in the world. A lot of it supplied with U.S. help. And when Fujimori's government ended and Montesinos went to jail, you had all these hundreds of techies, these surveillance techies that went freelance. And they started working for subsequent governments, for the opposition parties, and for business leaders and corporate leaders in Peru. The running joke in Lima is, if your phone is not being tapped, you're not important. And yet every president seems to forget this fact, that this is possibly the elite of Peru are the most hyper surveilled group of people anywhere in Latin America. And yet they continue to get caught in scandals, unaware of just how surveyed they are by their natural political opponents. And so this is an issue that's not going to go away anytime soon. But Peru remains in a very advantageous position vis-a-vis its gold, its silver, its copper. And also the fact that they very carefully have built a balanced trade relationship with many countries around the world, and therefore are far less vulnerable to geopolitical pressure from one player versus another.
Yeah, I think they have also election coming soon, mid this year. But what is very surprising is that even with this unstable political presidency, the country economically performed really well in terms of many of the macro variables. I mean, in terms of exchange rate and reserve and inflation. So it's really, I think, one of the best country in the region. John, certainly people will like to listen what you have to say about Venezuela.
Yeah. So in Venezuela, there's two different storylines. One storyline, which was very much the hope of Venezuelans and Venezuelan expats, is that this military incursion leads to a transition towards democracy. I would not discard that likelihood. I think it will happen. I think it will happen slower than many would hope. The common thinking in the past was, you build democracy and then investment flows. And the Trump administration has taken the tact that they want to revive Venezuela's economy first and then transition towards democracy. This is really a reflection of two very different focus of thinking within the Trump administration. The Trump administration has at least 4 different sort of ideological chapters within it, and they don't always see eye to eye. And the Venezuelan operation is very reflective of that. There are those who want to make deals in Venezuela, who want to revive the economy and give a leg up to U.S. Energy companies, as well as other suppliers of goods, so that they can recapture the Venezuelan market, which for many companies up until Hugo Chavez was the third biggest market for them. Whether they're selling agri-food into Venezuela or selling basic consumer goods. We believe that there is a surprising amount of capital that is ready to invest in Venezuela, even in spite of concerns over security, over judicial protections, over intellectual property protections. But there is a lot of high-risk capital willing to do that. This is capital that comes out of hedge funds. This is capital that comes out of family offices, including wealthy families from Venezuela, like the Cisneros family, or wealthy Venezuelans who are well connected to money in Colombia or Argentina, as well as people like the ex-CEO of Chevron, who's amassed a $2 billion fund to look at oil deals in Venezuela. Just this week, there was movement around regulations in Venezuela to loosen the monopoly that PDVSA has on the sector and allow more and more private investment. U.S. refineries are, in particular in the Gulf area, were built for Venezuelan oil and have capacity to take that in, especially in light of the fact that the Canadians want to sell more and more of their crude to Asia. And it is one of the few other places in the world that sells the same viscosity of oil as Venezuela's unique thick viscosity is Canada, Athabasca tar sands. And so the geopolitics with Canada and the fact that Canadians want to lessen their reliance on the U.S. market only makes it more compelling for the Americans to buy Venezuelan oil. Just the mere fact that the U.S. are now buying Venezuelan oil as opposed to Venezuela is giving it away at discounted prices through its Petrocaribe program led by Cuba means that more money will be going into Venezuela. I think things are going to move a lot faster than most people would imagine. It's not going to be publicly traded companies that are going back into Venezuela. It's going to be private companies, private capital. But I think the bigger question mark is what happens to democracy in Venezuela? What happens to elections? What happens to, and this is where the Venezuelan democratic movement needs to continue to pressure both, and Maria Corchalo's strategy has been brilliant thus far. She knows how to stroke the ego of Trump while applying pressure to those like-minded Republicans and Democrats in Washington, as well as other leaders around the world, from the Pope to presidents, et cetera, to make sure that democracy is not lost in this transition.
Great, thank you very much. Yeah, certainly there is a lot of to do in Venezuela, but many private capital, quite a bit of private capital providers are interested in identify and probably investing in the country. John, one last prepared question, because there are some questions coming in from the audience, is how should business leader adapt their strategic planning and investment decision in a year of significant uncertainty? We will try to finish it up, with your advice, and then trying to answer some of the questions that I've been reviewing in the comment section.
Well, I think a lot of companies already made the transition last year, or began changing their strategic approach to investment capital. The first is your strategic planning or your annual planning horizon needs to shrink to semi-annual or even quarterly, so that you are constantly upgrading those plans. If you make plans now that are designed to last the whole year, you may be forced to pivot anyways because of a geopolitical event that changes everything for your particular business, your particular product lines, the countries you service, et cetera. So building into your planning schedule a quarterly revisit of your plan, I think, is prudent. Likewise, when you're looking to deploy capital in a significant CapEx investment, whether you're buying a company, whether you are greenfielding assets, you want to space it out over time and have the flexibility to pause such investing if needed. Now that slows things down undoubtedly, but it provides it provides some protection around your cash flow, because cash and convertibility become very important management and planning stakes in the ground that you really have to protect because of the longer term uncertainty or the medium term uncertainty. You also have to have agility when it comes to reacting to regulations. So a lot of clients we worked with last year, they got very creative in how they repackaged products, and from where they source products. It put enormous pressure on their logistics function, but it was important to lessen their tax exposure around tariffs. Likewise, there's policy, the risk of policy interference in your business model, not just coming from changing rules in the United States, but more importantly, for changing rules in the region. You have to be careful. So there's certain industries that are more sensitive or more susceptible to political interference, whether it's things like utilities, energy, mining, infrastructure. Those are the ones that I think you really have to be, you really have to do your intelligence gathering to see where regulations are going, whether it's reading the tea leaves correctly in terms of domestic politics or understanding how Washington's policy desires are going to impact your business. A lesser degree of agility is needed around demand-driven industries, or demand-driven industries like consumer and middle market B2B, parts and services, software. I say that because as the US currency weakens, generally Latin American currencies have been strengthening. Certainly the Mexican peso and the Brazilian real did very well last year. And so consumer demand, or demand in these markets for imported goods, remains strong that are denominated in dollars, which most are. And just resilience to your operational supply chains, building in more redundancy. It will hurt your margins, but it will lead to fewer stockouts and losing market share because you just couldn't fulfill orders and things like that. Flexibility is the key.
Thank you very much for those comment advices. John, it came to my attention an article from the Financial Times over the weekend, which I actually will be posting in our LinkedIn account, because it showed a very interesting and optimistic vision on Latin America. So I guess that will complement or actually expand some of your comment. I think I perceive that you also somehow you are optimistic because of the, again, natural resources, how the region is positioning with this geopolitical situation. So I will, and again, I'm hoping in the next few days we will be able to post it for the audience, because I find it very interesting. Yeah, thank you for sharing an extract of the article, and I think it's too long to cover this time, but yeah, I think it's helpful for the audience that is also interested in finding a little bit more on the region. We are having a lot of interesting questions, John. One that I think is quite relevant is about the Mercosur and the impact with the region, specifically for the countries that are included in this treaty. I think it also give more room under this geopolitical competition, I guess, with the Europeans that are trying to, be more active in the region. What you have to say? I mean, I think it's very appropriate discussing this treaty, which I think still require approval, but seems to be moving along.
Yeah, I mean, it's been close to 20 years in the making. I probably, there's a lot of factors that led to its final approval, including the redesigning by the Europeans so that they were not beholden to one holdout vote. And so they were able to break it up into different sections. And as long as they had a strong majority, they were able to push forward. At the end of the day, the sticking points on either side were agri-food coming out of Latin America, out of South America into Europe, a market where farming is heavily subsidized. Farming scale is much smaller than South America, whether it's wheat farmers in France or southern Germany. And there's also concern that, most of the big scale farming coming out of Brazil and Argentina, Paraguay, tends to have genetically modified product. In Europe, the smaller scale has also been associated with very strict limitations on the use of GMOs. And so it remains to be seen, even if you take away the prohibition of these products and through this trade agreement, it remains to be seen how those products that are GMO impacted will be litigated by regulators in Europe, and whether in fact they will penetrate the market as much as farmers in South America would like to see happen. In reverse, a lot of European products don't have competition in South America, whether it's luxury or certain processed goods, but certainly the industrial sector, so equipment, B2B inputs, is definitely going to impact the manufacturing base in Brazil, especially, which is quite integrated and therefore has some overpriced suppliers in its system. So there will be some disruption there for sure. But at the end of the day, this is going to, I think, help Mercosur as well as help Europe. But there will be winners and losers depending on the industry.
Great, thank you. Another question from the public is regarding the politics of my country, Colombia. What is your view about the coming presidential election, actually specifically about the current government candidate, which is leading the polls, and potential alternative, and how there's still, I think it's April, if I'm not mistaken, the first round, maybe May. But I think there is quite a bit of interest in understanding what could happen in Colombia.
Well, Petro, like any populist, has his core base, and certainly the antagonism that has been on display between Petro and Trump has only further divided Colombia. So in other words, those who are supportive of Petro have doubled down under the sort of flag of anti-Americanism, and those who oppose Petro don't necessarily support Trump, but think that he's being reckless in his dealings with the Americans. The fact is that the disapproval ratings of Petro would lead one to logically conclude that the country is going to select a center-right candidate. But that all depends upon the candidate. And what we've seen in the political process in Colombia is that it's hard to get a sort of centrist, center-right candidate to the final round of an election. Last time it was a terrible choice between Petro and Hernandez, and as it stands right now, it's a pretty unexciting choice between Cepeda and the right-wing candidates, who right now just lost his vice president associate, the well-respected ex-chief of police, and because of a potential scandal international scandal that he's involved in, accepting monies from abroad. So until we see a competent and sellable center-right candidate emerge, this is Cepeda's race to lose. Fajardo in the middle, the perennial presidential candidate, has certainly proven himself as a competent governor, but he's not a good campaigner. He's very reticent to take bold positions, and he's very reticent to say, enough to convince people that he's the candidate. And so there's the lack of good candidates to oppose Cepeda is the biggest problem that Colombia faces right now politically.
Thank you very much. Again, there are several interesting questions. I will probably choose the last one because we are running out of time. But talking about Central America, I always find also a very interesting region. I mean, altogether, it's a population of more than 40 million people. And, they have stable currencies and is strategically relevant for the U.S. And you have the Panama Canal, you have a significant migration from the North Triangle in Central America. So what do you see as a potential of opportunities in Central America? I mean, Harry is actually asking specifically about Guatemala as well, but I will try to get it more into a regional context in Central America.
Yeah, there's a lot going on, and definitely the American influence is strongest felt in this particular in Central America. So in Panama, they certainly, the Molino government and the political and economic elite of that country want to remain very well positioned with the Americans. But there's a growing sense of sovereignty in Panama that sort of says, we don't like being pushed around by the Americans or the Chinese. And so there is a growing resolve to fund their own infrastructure and not rely on the Americans or Chinese to do that. And so you're seeing some very interesting discussions around deploying capital that is raised by Panamanian companies and Panamanian government to take on those infrastructure expenditures and not therefore be beholden to either great power. In Costa Rica, you see politics also becoming a little bit more populist. Security is definitely an issue in Costa Rica. Again, Costa Rica is a much safer country than many parts of Latin America, but that doesn't mean anything if you're a Costa Rican and it's more dangerous than it was 5 years ago. Then as far as you're concerned, that danger level is unacceptable. In Honduras, we have a still unresolved presidential contest where the left is the incumbency and the right is trying to change things. There's a lot of investment in Honduras that will move forward if that change in government happens, that is being held back by the interests of the left in Honduras. In Nicaragua, you see a government that has avoided the wrath of Washington until now, just because there was bigger fish to fry, but I think they're very much vulnerable to Washington overstep. And Guatemala, Arevalo is the ultimate political survivor. He survived transition, which some people thought he might not, and has now very much learned how to placate the Americans and is becoming a bit of using some strong arm tactics himself to deal with security. So security is a real issue in Guatemala, very much so, and difficult to combat. But he is politically very astute. And so I think, he's doing the right things there. Generally speaking, the region remains an excellent outsource opportunity to selling into the United States. That has not really been genuinely threatened. And so I see them continue to grow quite well.
Thank you very much. John, thank you for sharing your insight with us today. As always, your perspective helps us bring clarity in a complex situation and rapidly changing global environment. To everyone that participate, thank you very much for connecting. Again, we will be sending via email via a link of YouTube, so you can maybe review it again or maybe distribute it. And we hope we continue having this discussion and we find it useful. I don't have anything else to say, but just that we will be open to further conversation privately if you consider appropriate, or making the appropriate introduction to John if you are interested in a more deep analysis or any particular industry or region or sub-region or either in a country. So thank you for your time and looking forward to continue this discussion. Thank you, John, and thank you everyone else.
Thank you, Alessio.